Hello, today is the 11th of January 2012, and this will mainly be focusing on silver. In fact, this is the only non-silver chart. There'll be 4 total images on the screen. And this is the quarterly chart for gold. I think what's important to note is that we had signs last year as the markets was going up from like 16 to like 1900 fairly fast, with some people stating that the market was going out of control, and I really have to disagree at a pretty decent level. And I think the significant part is either here or even here for that matter. That's when the size movements of the candles took a diminishing role. For it used to be a fairly volatile chart, and then the volatility dried up large, and it's still not so volatile, but the market is making a pattern not really of higher highs and higher lows, but just a constant uptrend because it doesn't really sell off too much, and it's just in this nice little uptrend. Therefore, it's one of the type of charts that if it doesn't wear you out on the short side, it should at least scare you out, basically. And when the markets finally tip in and everyone's wondering, well, why is this going out of control? Well, maybe you might want to take a look at this part of the pairing within the currency, or the whatever. Let's now move on to silver. Let's look at the quarter-day chart or the 6-hour chart. And this is what we are looking at. I was mentioning originally in here that no surprise if it goes sideways or corrects, because that's what happens when you reach a Fibonacci point. The odds favor that it's either going to sell off or go sideways, which is exactly what happened. Just because the odds favor it doesn't mean that it will, but it's good to understand if the probability odds say there's an 80% chance of one occurrence and 20% of the opposite or a different one, then most likely the 80% will win, but out of 100 situations, 20 times it will not. Therefore, let's look at the break-it and analyze this the best that we can. Since the breakout, there were these 3 candles in here that was mainly sideways consolidation, including the current one now, which has like a nice little hammer formation, and therefore any movements breaking above the previous resistance should give us a test up towards the the next Fibonacci level, which is 3168. I was asked on yesterday's video if we make it to 3168, if it's going to come back to 29, and I'll even use 2944 for that example, and I'll answer that question in about 2 minutes or so. Let's now move on to the quarterly chart for silver using the Fibonacci retracement from the 1972 lows of $1.27 and the 1980 highs of a hair over $50 per ounce. Since that point, you find some support the first time you go through with a lower high. More often support's tested, more likely it's taken out. That was the case there. On the second test, it was taken out. Found some support, resistance in here, comes back to support, pierce below. And then really it's been about 2 decades or so consolidating amongst this Fibonacci level, roughly at around $5 per ounce. As it managed to get to this level, it really didn't find resistance and sell off where it was, you could say, supposed to do so, but rather it consolidated within this band for about a year and a half, 2 years, before having a nice leg higher and then coming back and finding support at the significant Fibonacci point. Therefore, when it finally broke past this resistance point, you were pretty much, or you were getting confirmation that this market was going to retest this $50 high. Now, to answer the question about whether it will go from 31 and change back down to the 29.44 mark, I will use this one in here. Now, I shouldn't have saved this, but I was doing a video before, and obviously I saved this. I don't know why I didn't. Anyway, basically, here's a 61.8% resistance. Here's a 38.2%. If you would have made that same play there, it would have been correct, I think, on a mathematical level. If all you do is you wait for a 61.8% hit with a very good stop loss somewhere along the lines, and you sell the second that it hits or gets anywhere near this line here, you would probably be doing all right. And again, the reason why I have that line in there is because I was basically going over different possibilities of what may occur. And I'm going to go over that right now. And that is, one, we come back down to the previous level of support. The odds are extremely high that you would find a bounce from this level, which is in the area of around $18, $19 per ounce. The second scenario is that it doesn't go down to this level. We find support where we are now at 26, maybe it hits 23, 24, and that's it. And it manages to make it up to 50. The more often resistance is tested, the more likely it is that it'll be taken out. Therefore, the odds would be much higher that it takes it out either instantly or by creating a higher low, thus probably even creating a cup and handle formation, and then on the break it above 50. Watch out. Thank you for tuning in and have yourself a great day. Bye-bye.